Whether you like or dislike this particular piece of policy, one thing that everyone can agree on is it is extremely complex and very difficult to understand the full ramifications of. In fact, I recently was at a presentation where I asked a room of about 400 people to raise their hands if they felt like they had a real solid understanding of the provisions that are involved in the OBBBA, and almost nobody raised their hands. And so the first message that I want to communicate on this is you really have to work with a tax professional, someone that can go into the detailed implications of each one of these provisions and talk about how they could potentially benefit you. But clearly, to me, at the surface level, not being a tax pro, I can tell that there are two elements that are very beneficial. That's the domestic R&D expenditures being eligible for tax deductions now, and the accelerated depreciation provision. So it's both of those elements are being used, and I know from speaking to many companies, it's being used to offset some of the pain that they're feeling on the tariff front and kind of mitigate some of the downside pressure on the cost structure by realizing some of these benefits coming from the OBBBA. However, as I step back and try to ascertain the impact of both tariffs and the OBBBA, I say that, and this has been confirmed to me by many people that I talk to that are responsible for pulling the trigger on investment decisions, is the volatility and uncertainty and complexity of tariffs is too much for just the OBBBA to overcome in and of itself. Now, once we have a normalization and a clear picture of what the tariff regime looks like moving forward, then this is likely going to stimulate some additional investment. But as of right now, we're not quite seeing the boost that we were hoping to, because it's not enough to overcome the major uncertainty and volatility related to the tariff environment.